Hi everyone, this is Michael Kramer of Mock Capital. Today is Tuesday, January 21st, and it's around 4 p.m. New York time. So it's going to be a pretty quiet rest of the week. Really, the major economic data points coming up will be initial jobless claims on the 23rd. We're looking for 220,000, basically flat to last week's 217. Expected to creep up to 1.865 million from 1.859 million. Then we'll be getting preliminary PMI data points, not just here in the U.S., but across Europe too. And then the big number, I guess, for this week will also be this University of Michigan number. This is going to be an important one to keep an eye on because this 5 to 10-year inflation outlook printed at 3.3 in the preliminary reading. If that were to hold, which is expected not to, when the report comes out at the end of this week, this would basically be the highest print going back to the mid-2000s. And you can see here 3.3 would take you back into 2008 pre-financial crisis when inflation was running fairly hot as well. So that would be an important number. So right now analysts are obviously looking for that number to come down to 3.2%. And again, that's something to be paying attention to. And then we'll also be getting existing home sales. Next week is really when we're going to start getting a lot of important data. The one other thing this week that will be coming up is that BoJ rate decision. That's expected to come on the 24th. We can see that analysts are looking for a 25 basis point increase to 50 basis points, and that's pretty much also what the swaps market is projecting as well. So that's something to keep an eye on as we go into the end of the week. We have started to see the yen strengthen a little bit versus the dollar. Right now it's finding support at the 50-day moving average. If we were to see the yen really start strengthening below the 50-day, I think it could set up for a return back to this 149 area, just because you can see once we get past support at 154, there's really not much in here to keep it from not getting stronger. And it's really going to largely depend upon what the BoJ signals when they're done with the policy announcement. I think the markets at this point, it's fairly clear that they're probably going to be raising the rate. I mean, it's starting to now, come across and leak across various news reports as well. And that's usually a strong indication that they're going to be hiking. You could see the yen's also been showing some signs of strengthening versus the euro, but not nearly as much. When you look at the euro versus the dollar, you can clearly see momentum is starting to show signs of shifting, at least over the very short term. RSI has crept up over 50. You can see we're getting to this big area of resistance around the 50-day moving average and resistance around 104.5. If we can clear that level, I think there's probably room to move back up to this 105 to 106 area in here. Obviously, if we fail, then we're probably going to be looking at a euro that's going to head back down to 102. But this seems to be one of the stronger bounces we've had in the euro from some time, and a break above the 50-day moving average would be really significant. So that's, I think, really the key here to watch at this point. When we take a look at the pound, you can see similar. The pound is trying to start getting some positive momentum going with the RSI climbing. Here you can see the 10-day exponential moving average. We're able to get above that. This area of resistance right around this 124 area, obviously very important, could allow for the pound to strengthen all the way back to 125.20. That's also where the 50-day moving average is going to start coming down to. This is an important area. If we don't pass this 123.60 area, I think it results in a push back down towards 121. One reason why we've seen the pound starting to strengthen is you're starting to see the gilt market at least begin to come down a little bit. We had broken out. We had gotten to a really high level on the 10-year rate, and right now we're coming back down and we're looking for some support around 455. If that should happen, it probably allows the pound to continue to strengthen versus the dollar. Probably if you see it coming down below 455, it lets the pound really begin to strengthen versus the dollar. So I would watch this 455, 456 area for the 10-year gilt. If that starts to really, if it starts to move higher again, I would think that probably sends a signal of worrying about stagflation, and that probably sends the pound weaker. Gold today actually broke out, it looks like, for the first time in a very long time, rising above these two tops at 2,700 and now it's coming up to a level of resistance at 2750. A break of 2750 sets up a retest of the highs, probably around 2800. That certainly seems possible. I think it's going to largely be dependent upon what happens with dollar. If the dollar continues to fall and rates in the U.S. continue to come down, I think that's going to lead to gold moving higher again. But again, I think it's largely dependent on that factor, because if the dollar starts to strengthen and rates start going up again, I think gold struggles. So 2750, 2800 would be your next two big levels. Anyway, there's plenty of support down around 2600, which was an area that was tested on a few occasions. I think right now probably the risk is for further upside. When we look at oil, last week we were talking about oil and a potential breakout. Now we've come back down. This looks like it could just be part of a retracement process. I'm not really sold on the idea that oil is going to come all the way back down, or this is going to be a failed breakout. Right now we're just at the 38.2% retracement level, so it's certainly possible that that's all this is at this point, and we're likely to continue to see oil move up. We did get really kind of overbought on oil, and that's not really it's not really much of a surprise, given that we got the RSI above 70. We were trading above the upper Bollinger Bands. Right now we're trading below the 10-day exponential moving average, with the 20-day down here. I would think if oil is changing trend and oil is going to go higher, I think you're going to find support in the 74 area. Obviously, if 74 doesn't hold, then we're talking about potentially moving down to the 50-day, and that's probably an indication that maybe this momentum in oil was really very short-lived and that you're not going to see it continue to rise. But again, there's lots of reasons to think that maybe oil will begin to move higher. One of them being that the U.S. is going to have to refill its strategic petroleum oil reserve at some point in the near future. And the other being is that this $66 to $70 a barrel area really held for such a long time. I mean, it's hard to imagine that oil just continues to trade sideways for forever. So if it's not going to break that important level, one would have to think that it moves up. So we'll keep an eye on that and see what develops there. The FTSE's had a really big move the last couple of weeks. We were talking last week about the potential for it to move higher given where copper prices were trading, and it certainly moved higher in quite a big way. So at this point, though, it's gone really quickly to the upside, and it's actually now overbought when you look at it from a standpoint of where the RSI is at 71 and where it is on the Bollinger Band. So actually, it wouldn't really be surprising to me to see it kind of consolidate sideways now for a little bit, just like we saw in oil and in rates and some of the other items we were just talking about. Or we could potentially move back down to this 84.40 area and test this breakout. If this is a real breakout, then even if we test this level, we really shouldn't go much below it. So that's going to really be a really big indication, because if for some reason, the FTSE breakout isn't real, which we don't really have any information to suggest it's not at this point, then we shouldn't really hold above this level for very long, and we should see us really come down below 84.40. If we come down below 84.40, then it's going to start setting up the potential return to this lower bound at 81.80. But again, we did get overbought really quickly, so I would think that a pause in this region sideways is probably the ideal scenario that you would want to see if you're bullish on the pound, if you're bullish on the FTSE, because that would at least be a sideways consolidation, and that would potentially set up the next move up. The DAX also very similarly overbought as well. It moved up rather dramatically the last couple of days. You can see we're above the upper Bollinger Band. We're above 70 on the RSI. So those will both indicate that we probably, again, just like on some of the other ones and the FTSE we were just talking about, sideways consolidation would be the most likely scenario here. I mean, you can't rule out a potential return back to 20,500 or so, but given the strength we're seeing right now, I would think more likely a sideways consolidation like the FTSE would be the most likely and most ideal situation if you're bullish on the markets. Clearly a break below 20,450 would be a negative and probably suggest that this is some sort of final phase of some sort of bigger move higher that was taking place for some time. When we look at the NASDAQ's also been moving up the last couple of days. although most of the gains have actually been coming in the overnight sessions. You can tell that by looking at the little, the little wicks that have doji looks to them. And essentially that's telling you that there's really not much happening intraday once we get past that open. And more importantly, we're not overbought, so we could see the Nasdaq extend further. Certainly with an RSI of only 56 and well below the lower Bollinger Band. Moving averages really aren't in play here. And based on this chart, I have it marked off with basically a level of resistance coming around 61,630, which was where we closed basically at today. But there is this gap still left to fill at 21,770, which seems like an ideal place for this to move back to, at least over the very short term. And then we can maybe see what happens from there. It wouldn't really be surprising to see even the Nasdaq come back up, given the strength we're seeing in some of these other European markets, for a return back to the highs around 22,100. Again, there's a bunch of open gaps to the downside, so I think we need to be mindful of those. But without it really being in an overbought condition, it's hard to imagine that you're going to see a sudden unexpected reversal, I think, without rates moving higher or the dollar strengthening. And I think that's partially why you're seeing the strength in the Nasdaq. It's really the same thing for the S&P. I think there's probably some resistance at this 6,060 area. And then, of course, we could potentially return all the way back to the highs around 6,100. Certainly here was a downtrend that's been broken. So that certainly is clearing the way for a further move higher. I mean, you can see we're close to being overbought here on the Bollinger Band, but we're not really close to being overbought on the RSI. And what that tells you is that there could still be further upside here on the on the S&P as well. And finally, when we look at the Dow has retraced a little bit more than 61.8% of its declines, but you can see the Dow is trading above its upper Bollinger Band, but it's not really it's still got an RSI only in the 60 regions. So it's entirely possible that the Dow can continue to rise for a couple more days along the upper Bollinger Band without triggering an overbought condition. But again, we were able to hold support at this 41,895 region, and that now we're moving higher. So the way I'm looking at this right now is if you look at it on if you look at it on an hourly chart, you can see a little more clearly how there might be some resistance just overhead, maybe around 44,400 if you just kind of get rid of these Bollinger Bands and then you draw a horizontal line across. You can see the support resistance in here. There was resistance in here. There was support here. It looks like we consolidated a little bit here. And so I would think you'd probably move back to this area would be the next target region that we're seeing on the Dow. Anyway, I hope you found this helpful. Until next time, have a great week. Bye.